Hello, hello, hello. Welcome now, Stock Trades. In this video, we're going to go ahead and talk about what the hell is going on with the Clover Health stock. Is it going to go to zero? We've gotten so bad that no longer have people come after me. They're now coming after Andrew Toy. So I spoke to Andrew Toy's PR, a person responsible for communication to shareholders, and I got a response from him. And here is the response for you all to watch.
Leave her alone! You're lucky she even performed for you bastards! Leave Brittany alone!
Okay, all right. So that was the video. It was a short video, but just wanted to go ahead and bring it on for you guys here. Woo! All right, guys. All right, guys. All right. Enough clowning. Enough clowning. Enough clowning. I hope that made you guys laugh, and I hope it made the PR from Clover laugh here too. All right. So we're right now at extreme fear. I am seeing a lot of things that are very funny, and people are losing their shirts right now. So it's gotten to a point where I'm actually about to break my own promise, and I'm going to actually start chomping down at these prices. You know, it's gotten pretty good. Wow. Right? Got a response from the Clover Health PR team. Oh my God. I am laughing, man. That is hilarious. Okay, so what the hell is going on, right? I mean, like we, woke up today and the whole thing just basically, I went EDP today and bought 1,000 shares. Right? So what's going on? So look at this. This is stacked. S&P 500 down 1.46%. Dow down 1.24%. Dow down 475 points. NASDAQ down 1.262%. And the Russell leading down 1.93%. So what's going on, guys? What's going on? So Dow sheds nearly 500 points, stealing its worst week of 2024. Jamie Dimon, high rates present challenges for even the biggest banks. So, all right, guys. So, the consumer price index came back and it was 3.5% top print. Inflation is higher for longer. That's unfortunate. Majority of it is used car prices, et cetera, et cetera. In terms of auto insurance is the biggest one, right? And that's because of the used car prices that were up from before. So the question of the matter is, once we get the PCE and more Federal Reserve indicators that are used to make a decision, we're going to basically see kind of where we're at. There's been talks that a height rake might happen. That will be hawkish, right? That, like, if I'm going to be a bear, I'm going to be a bear on the rate hike. Okay. So if we get 3 cuts, 2 cuts, 1 cut, or no cut, it's okay, right? At least we don't get a hike. Now, if we get a hike, then that's not good, right? You're going to see a massive correction in the stock market. Okay. The premise of 2024 was that the inflation was going down, and now we're starting to see it get a little sticky. The question of the matter is, are we still in a downward trajectory and we just have to adjust? Wall Street has to adjust its expectations. Because if you don't recall, we were expecting 6 to 7 rate cuts this year, down to 3, and the Federal Reserve even said 3. And now it's down to 1 or 2, maybe just 1. And now potentially 0, and now maybe a rate hike. So that's what the market's trying to correct right now. So if we were to look at the map right now, holy baloney, man, get me an apple, right? Get me a freaking apple to keep the doctor away, right? Everything's down here, okay? I need an apple, a Visa card to go to the mall, definitely not shop at Amazon, and probably maybe do some shopping in the, I mean, look at this. This is a sea of red. And if you think this is bad, look at freaking Russell 2000. The ones that are heavily influenced by interest rates. Holy Maloney. This is red. And if it's green, it's not that much green, except that small little thing right here. It's up 3.72%. 2%. PFS, right? Is that PFS? Whoa, yeah, 3.6. Look at that. That's wonderful, but it's still down year to date. Okay. So what do we do? Well, these are my thoughts. First, let me go ahead and just kind of make sure I discussed everything here. Oh yes. Look at dumb money. Dumb money's falling. They're going bye-bye. They're like, ooh wee, going all the way down, like slip and slide. Wee, like the Jurassic Parks from Universal Studios, a little ride. Wee. And then smart money's coming back online. Okay. So I wanted to share with you that. And yeah, so let's go ahead and go back to this guy here, the PR Clover Health, right? And let's go ahead and talk. So what are my expectations? Well, first off, Andrew Toy, if you're listening, I hope you enjoyed the laugh. I hope that was funny. But here are a couple things I'm worried about. Why is your chief scientific officer from Clover Health leaving? Maybe from what I've seen, it was wished like a bye, as he starts his new venture. You need to, in the next earnings report, or maybe somehow find a way to communicate to shareholders, because your white papers, the papers that are used for Clover Assistant, the flagship papers that model your GFR rates, your diabetes, medication adherence. This is very important, and your CSO is leaving, so you got to communicate with us. Is he leaving, but then he's going to get contracted out as a private contractor to sustain his research? Is that what's going to happen? If that's fine, okay, that's great. He can just go ahead and build his endeavors. Because when your CFO leaves, and then your CSO leaves kind of back to back, it doesn't look good. You got to have to, your leadership team is leaving. Okay. So that's not good. Okay. So the CFO, Chief Scientific Officer, Dr. Kumar Dhammaranjan, this is important, right? So he's the one that's, he's the guy that's communicating with the white papers how important Clover Health is. So we need to keep that communication going, right? Now, granted, a PhD and a computer scientist can go ahead and oscillate the work and do all the data analysis, but someone else needs to come online. It just so happens to be that Dr. Kumar Dhammaranjan is a well-respected physician. He's published in New England Journal of Medicine, JAMA, highly respected journals, right? So that's kind of the idea here, okay? He's published around 95 peer-reviewed articles on PubMed, right? I'm early in my career. I'm at 10 now, but I'm about to get my 11. And so he's published 9 times as more than me, right? Hopefully in the next 2-3 years I'll be more than him, right? There's a little competition there, right? So so that's kind of where we're at, right? So I want that to be addressed, because that's just another thing that we have to talk about, right? Just another thing that we have to talk about. So that's annoying, right? But the biggest thing here is I'm happy Clover left the ACO. It's just that was just a dying business right now, especially with increasing rates. Increasing inflation right now we're having, and potentially increasing rates, or just higher for longer, right? Higher for longer. That's kind of the word now. Hashtag higher for longer. And that's a big thing now, because, we're back to that same premise. Free cash flow positive and net income positivity. We're back at that again. So interestingly, Clover has no debt. That's really good. Other companies do have debt. So just like how the United States, if you look at their kind of borrowing and whatnot, they're going to get to a point where all the spending that the United States has done, there's going to be trillions in dollars in interest payments, and that's not good. If you were to, short something, it would be shorting the United States. But again, you can't, because they can print money whenever they want. So, it can be a short squeeze too, right? So what I'm trying to say is other companies, I believe Alignment Healthcare and whatnot, I think some other companies have debt, okay? Other healthcare companies have debt. And this is going to cause a change within the intrinsic value calculation of these companies. Now, I haven't checked, but I'm curious to see what is Alignment Healthcare stock right now? So it's down 2.42%. CLOV is down 5.88%. I think Alignment has more institutional holders, right? And then we have Humana down 1.17%. And then this is just for today, right? And then United Healthcare is down 0.57%. So let's go to year to date. Year to date, Alignment Healthcare is down 44.64%, almost 45%. Clover Health down 30%. Okay, it's getting up there. It's catching up to Humana, right? And then Humana is down 33%, 33.5. So it's catching up to Humana. And United Healthcare is down 18.57%, which is huge. 20% reduction in the stock price. That's billions of dollars, right? So, look at Clover. 67 cents, guys. 67 cents. Like, that is insane. Like, you just look back, and this is just a drop. Just when you think, just when you think it couldn't get worse, it just did, right? So, the pain in people, the fear, everything is just basically circulating, right? So the question is now is Clover Health, is it a sell? Like, is this it? Well, there's some bad, right? CFO, these are all bad, right? But then we have the new CFO from Humana for Medicare Advantage. They are changing things. And I believe the change is gonna. So I'm gonna tell you what I think. Okay. I think the people that are the new people that are coming in, and you're gonna see people leaving soon, is gonna be a transition of the startup company that Clover was to the maturing company that Clover will become. And right now, Clover is in the. There's good and bad to this. It's about to become an insurance company. It's about to do what insurance companies do best, which is to piss off doctors, right? Hopefully not, but they're going to engage in some fiscal responsibility now, and they're going to do some things that are in the best interest of shareholders. They have to, right? And they're going to heavily focus on profitability. Like Andrew Toy now as a CEO, this is it. Like he is being challenged right now as one of the weakest performing stocks in the market, right? So this is it, right? And he's responding, I would say, in an elegant manner by cutting off the fat. The next thing he needs to do is he needs to figure out who he needs to fire. Your SG&A is high. You have two things to do, Andrew. You either fire more people and then drop down SG&A spend to make sure you get that true net income, right? And then free cash flow, of course, right? Or you increase your revenue that is profitable to offset the SG&A that is high. And hopefully not increase the SG&A because you'll be stuck at square one. So these are the things that I'm looking at right now. And all you need is one good quarter, right? But I think this year is shot for Clover. I think this year is going to be a rebuilding phase. What is in my mind that I've been worried about since day one is that 3-star rating in 2025. I'm hoping that the rate cuts that, might happen, maybe one, I was hoping the rate cuts might offset, a good little boost in small caps, but now it's getting a little tricky, right? So Clover needs to do its damn best to get that 3.5 star, or if they can, to get that 4-star, jump from 3 to 4, right? So that's something that they need to figure out. Okay. So I'm going to go ahead and answer some questions here. Isn't it all from the stolen Kias? I don't know what that is. I don't think they are going to cut this year. I think they might even hike. Exactly. That's what the narrative is kind of saying right now. And Clove is honestly being a POS. Indices fly, it goes down. Market falls, it falls. It just goes down and down. I don't blame people for losing hope. No, of course. I'm going to respond to the word hope. Hope is a good word. 2 months now. If interest rates in Clove is able to sustain 0 FCR or greater, it would mean more income from the cash, which wouldn't be the worst. Just more waiting for growth. Exactly. So, hope. Hope is a big word. Okay. So right now, if you were to go, actually, you know what? Let me go. I think StockTwits does this. I again, I'm not. I don't go on StockTwits a lot, so I just don't. Yeah. Here it is. Here it is. So the message volume is high, but then people are very bearish. The sentiment is bearish. This is like people are not happy right now, right? So let's talk about the word hope. So right now, the stock keeps dropping and dropping and dropping and dropping and dropping, right? And they, what's changed from 2-3 years ago? Yeah, a lot, right? The revenue growth is down. This, right? But in terms of the balance sheet, it's going to get stronger. Okay. But look at the stock price. The stock price is in hell. The stock price is dropping. So this might be the time where the retail investors finally are going to let go. I would say if we get down, I don't know if we're going to get down this low, but if we get down to 40 cents, 45 cents, that's when people are going to be like, oh my God. That's when people are going to be like, holy shit. And I think that's when people are going to I think that's when people are going to run, right? There's just a psychological thing when there's just going to be, because you remember you have many people cycling into this. You have people cycling in this at $1. If we have people cycling in this at 80, 90 cents, and they're going to drop down, and they're going to be like, oh my God, screw this, buy, right? And I'm looking at this, and what I'm doing is I'm going to be buying more, right? Because I'm seeing a company that has industry-leading MCR, that is in a sea of red with Humana and United Healthcare, that is being attacked by high utilization costs, while Clover is not experiencing that. So I do think they have a viable business model. It's just right now the economy is a mess with interest rates being this high and potentially higher, that it's causing an aberration. So exactly. So you see it, right? 40 cents, and the puke face. Exactly. Right. I think because right now people are like, okay. But when there's just a level of pain that hasn't been reached yet. And that pain, once those types of numbers hit, then everyone's going to be like, oh my God, like, holy shit, like this, like, what am I doing? And then that sympathetic nervous system is going to go crazy, and it's going to go insane. And, you have here a $332 million market cap. And you cut that almost by half. We're talking what, $150 million market cap? 170? Does that sound right about you for a company that has a revenue of over $1 billion and about to become EBITDA profitable and hopefully soon profitable? It doesn't make sense, right? So evaluations now are all messed up, right? And this is where I think the money is, right? So a lot of incumbents, they're hoping for more pain. And honestly, I was expecting the stock price to prove itself this year, but with the inflation and rate hikes and everything, I think this is going to cause more pain. But I was like, there's no way by like September, October next year that Clover is going to be at these prices. And you know what? It's actually worse. So this is now I'm getting to a point where it's like, okay, well, yeah, we're going to have to buy some more, right? And it's not buying some more at us, like we're being stupid. Like, why would you buy? Because look at it. Like, this thing is down 30% this year. 30% this year, and it's approaching profitability. And it's not the only thing that's down an absorbent amount. Alignment Healthcare is down. Humane is down 30%. This behemoth is down 18.57%. So So that's what I'm saying, right? And then Nick, you raise a good point. Why would insiders be buying if it's going bankrupt? Warren Buffett, buy when others are fearful, and remember the market can stay irrational longer than before you can say liquid. Exactly. And the response from people that are scared are saying, well, it's not enough. What's $100,000? They need to buy more, right? And again, I'm not going to argue how much someone should buy and not buy. I'm just saying that we're getting at levels that have not been seen before. Okay. So, yeah. So let's see here. And I'm looking at increase in members too. That's what I want to see too, but I don't want it to see increased members at the expense of increased SG&A. So that's kind of where we're at right now. I would say we're nearing peak fear. If not, we're approaching it. We're approaching the hilltops of peak fear. And honestly, this is a long-term hold. This thing could go down even more and I won't bat an eye, right? The more it goes down, like the way, okay, so it's the past 6 months, it's gone literally from here, $1.13 down to from November to April. How many months is that? December, January, February, March, April. In 5 months, it's gone down 40%. So all you need is the inflation to the upside. I'm sorry. Hello. Inflation to the downside, interest rates to the downside, and then the Russell to the upside. The Russell, if you haven't realized, it broke a key resistance level today. That's why you got a big dip. The Russell broke a key level over here. Let me show you. Oh, yeah. You like this picture? He's better now. Feels a lot better. Let me show you the better picture here. Yeah. Let's see here. So the Russell actually broke a key level of resistance today, and that's when the market kind of shat on small caps, right? So that's where we're at right now, because we were going in a nice, we're following this nice trend, and then we got a reset. Now we're resetting down. Now the algos are resetting for the next possibility of a rate cut or potentially rate hike. PC inflation isn't looking bad. It's just a CPI blip. Exactly. And that's kind of what we're looking at, right? So that's kind of where I'm at. I'm on it again. So this is a long-term hold, right? So let's go ahead and take a look at a company that just wasn't the shitter for quite some time. Okay, even Enphase is down today. Enphase down 10%. So let's so let's go ahead and let's say here, okay. 2012 Enphase came online. You bought it, and all of a sudden it dropped down by 56%. You lost half of your money. The stock's at $3. You hold, you make back up your money, like, okay, this is good. You double your money, you triple your money, you're excited. You're like, yay, oh my God, it's going, what? It's falling, right? Let me zoom in so you can see what the hell I'm looking at. Let's start over the simulation. You bought at 734, but then it dropped and you lost half your money. Oh, more than half, 63%. Okay. It's at 265. You're like, okay, be fearful when others are greedy. Okay. You do that, and yay, you're rewarded. You're up 2x. You're like, oh my God, this is amazing. I'm going to keep holding. Oh, it dipped a little bit. Oh, wait. I'm up 5x. I'm going to keep holding. Right? And then all of a sudden you keep holding. Let's go back in here. You keep holding, and all of a sudden it drops down. And now you were already down 50%, and now you're down another 50%. Why? Because the stock price now is $1.71. You bought at $7. It's $1.70. It went from $16 to $1.71. Oh my fucking God. Enphase is about to go bankrupt. Okay. But then you're like, you know what? We'll hold. The fundamentals make sense. We're hold. Okay. All right. It went up. You're still down. Went up. Oh, it went back down to $1. Okay. We're back to the same bullshit. Okay. Then we wait. We're waiting up. Now it's $1.20. Oh my, I'm done. Like I am Screw this stock. This stock is a POS. But I see the fundamentals. They're getting better. Let's go. $1.07. Oh, fuck me, right? What the hell's going on? Then it goes down. Then it goes down, right? It's been $1 for, now it's 82 cents. 82 cents. What the hell's going on? I bought this in 2013 at 7, and now it's 82 cents. This thing is the most stupidest stock. I'm telling you, there are people like this, guys, right? They bought at 7, and then now it's, right? This thing is the most shittiest stock I've ever seen in my freaking life. 82 cents? Screw the CEO. I'm going to go on his LinkedIn, and I'm going to bag on him, okay? So then, then you like, people lose hope. Then it goes up to $1.50. Or I'm selling. I'm getting out. This shit's about to come down to, 80 cents. It goes up to 2, and you're like, okay, 3, okay, that's okay. What? Oh, what? Oh, it's gonna fall down. I've seen this stuff. Fuck this asshole. Screw this company. Screw this company. $7, $9, 13. No, right? So what happened here? What happened? What happened? What in the world happened to Enphase? So let's figure it out. Let's go to the terminal. Okay. And let's go and let's do open up the which one? Open up the help. We need help. Brain machine. This is brain machine. Brain machine activate. Okay. So let's go ahead. Let's do, I think it's master analysis. Hold on. Let's do this one and let's do Enphase. I think we have to send it twice because Discord is Discord. Oh, yep. Wall Street. Enphase. Fetching data. Processing data. Analyzing data. And here it is. So here's Enphase. I want you to go to free cash flow. Where the hell is free cash flow? Here it is. Negative, then it went positive, which is why it went up in 2014. Then it went negative again. Oh, God, right? Kind of almost looks like, rate cut, rate hike, right? Negative, 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 negative. Oh, wait, positive. 2018, it became positive. 2018, oh, my God. And then what happened? What happened? 2018 was 2018 went from negative 33 million to 12 million. But guess what? Negative 46 million in 2016. Then 2017, it was less negative 33. And then we went to positive 12 million. So then if you look at the stock price for Enphase in 2017, it was 93 cents. 93 cents. But you can argue and say, well, in 2017, we went from negative 46 million to negative 33 million. The company decreased their revenue. They're focusing more on profitability. Their gross profits increased from 18 to 19.6%. Their operating income's gotten better. Net income is more closer to zero. That's less negative. Earnings per share is less negative, so it's closer to profitability. Yeah, they went ahead and diluted shareholders by almost, a lot, from 51 to 83 million. That's not good. You remember they had a share dilution that year. That's why the stock went down to 80 cents. Right? And then it's like, what do we do here, guys? Like, oh my God, this is a terrible company. Oh my God, like, what's going on? Free cash flow. But you know what? I'm going to bite the bullet. And because it's going down, I'm going to do the revenue of 286. And I know the company is going to end up growing soon. They're saying all these plans, and we're going to assume, let's try to do maybe a 20 or 30% growth rate. And then boom shakalaka, right? 2018. You do it, and then 2018 became free cash flow positive. You just 5x your money. But then you do a new intrinsic value calculation. You find, oh my God, this thing can go up high. And look at that. We're talking 42,000% increase, almost 40,000. Okay. So you can see how it took many years of it being free cash flow negative, and then many years of it being net income negative. Finally, in 2019, it reached net income profitability and free cash flow profitability. And you could see 2019 what happened. It went up to $33. But then it just kept on growing because if you look at the numbers, look at free cash flow. We're 324, 196, 300. It's almost at $1 billion in free cash flow, right? But who would have known that this would have been $1 billion of free cash flow when it was growing at 33 freaking million dollars? Sorry, negative 33. Okay. So this is basically, this is kind of where I'm at, right? So, all right. So let's see here. I hope Toy watches this and comments. Yeah, that would be funny. This is actually very entertaining. I'm glad. I reckon this video will go viral. Yeah, I mean, just imagine we're talking about this right now. And we're talking on the fact that we are experiencing what Enphase has experienced in 2017, right? I mean, think about it. Enphase, the people that bought Enphase in the beginning, and then in 2017, these guys were down 88%. But imagine if these original OGs held, they would have been up as high as 4,600%. Or if they would have averaged down, they would have been up over 46,000%, right? We got to get the right number here. Right, yeah, around that, right? So in closing, I have a important message it just came in right now, from the PR team. He wanted to finish off one more thing, and he wanted to say something, and I'm gonna have him say it right now. So just give him a second, and here you have the.
Please. Perez Hilton talked about professionalism and said if Britney was a professional, she would have pulled it off no matter what. Speaking of professionalism, when is it professional to publicly bash someone who's going through a hard time? Leave Britney alone! Please!
And I'll see you on the next one.